GM, and welcome back to Finality. Today marks the 10th episode of Builder's Diary. If this is your first Builder's Diary episode, this format sheds light on the amazing people behind your favorite Web3 projects, chains, and applications. Let's find out what visions our fellow builders and founders follow, how they got where they are today, and what future developments they anticipate. Today, we are joined by JP, who is the founding partner of Areta, and we are going to talk about all things in M&A in crypto, as Areta is one of the biggest, if not the biggest, M&A bank in the industry. Welcome to the show. Thanks for joining, JP.
Thanks a lot, Juri. Great to be here in a very interesting market week.
For sure, for sure. Yeah, what a week to record this episode. I am sure you are very busy at the moment. But before we dive into all of these vectors that are worth uncovering, and to basically also have like a small forecast into M&A in the crypto industry, let us start at the very, very beginning of everything. So you started your journey like the classic finance bro, I would say. You if you go, if someone would look at your LinkedIn, you basically see like all the boxes checked, so to say. You also studied here in Frankfurt, where I'm recording from. So before we also get into that, when did you first discover that you had like kind of a passion or like an interest into finance and the economy?
Yeah, it's a great question, and probably a lot of people discover their interest in finance during business school days and maybe undergrad studying finance or business administration. And it's probably to a certain degree also true for me, but weirdly enough, and I had this interest in business and finance already during high school to a certain degree, or more than probably a lot of other high school students. I remember I was reading actually this Frankfurt Allgemeine, the German newspaper from Frankfurt, around about which has a bit of a focus on business and finance every day basically. And my parents thought I'm probably a little bit strange. I wasn't that nerdy necessarily back in the days, but definitely had interest in business and finance, and started some small entrepreneurial unsuccessful things probably during high school as well. Um, but so relatively early on, found business quite interesting, and then also decided to study business information systems, which is a little bit of a mix of business and computer science, if you will. But Frankfurt business schools are very much more focused on business and finance, and that's also where I put my focus then throughout my studies and later on in the early years of my career. But so yeah, I think goes actually back quite many years, and it was just it became clear to me during studies that that's where I want to be in business. It's sort of what interests me the most, and probably matches my skill set relatively well. And maybe it's also basically a function of what are the alternatives and what else could you imagine doing in your life, and then business just sets you up in a very broad way, which I found really good. So you could have a lot of opportunities, even if you figured out later on that finance, for example, wouldn't be the right thing. There are tons of other things you can do in the business world that have nothing to do or very little to do with finance. And so I thought it's also just a great starting point, and you can develop more expertise in certain subfields later on in your career.
Yeah, interesting, because let's have a closer look at that. Because yeah, once again, your path took you from Frankfurt Business School of Frankfurt Finance School, then to St. Gallen, where you did your master's, I believe, right? Yeah, and then BCG, Barclays, Partners Group, and then finally Blackstone. So again, that's the the dream career, the dream academic journey that one who is targeting a big career in finance is looking for. So before we get like more into the specifics of M&A, I mean it's a fairly hard a fairly hard path, not specifically from a university perspective with regards to studying all of these things, but the grades that you are targeting, and then also basically all of the internships. It's not, it's like one of the hardest internships you can probably do at Barclays, BCG with long working hours. So, what made you stick to the journey? What was like the one thing where you said, okay, that's, I know what I'm doing here. That's the number one thing that I want to do in life.
Yeah. Yeah. And private equity, then again, is so coming back to basically what we discussed before, is a very specific niche and sort of field within business more generally, and even within finance, right? So that's something serious that takes a lot of time to sort of figure out what it first of all is, hearing about it, and then also trying to get a job in that field. So I think there were a lot of different steps in between, and basically when you get into business school, especially in Germany, also a private business school environment, it's very much career focused, right? And I really appreciate my time at Frankfurt School, for example, which was a completely different environment than what I was in a public high school in Germany, where it's almost in a lot of instances uncool to be ambitious and have goals, and then you suddenly come to this business school where basically everyone you see is, I mean, most of them are very smart and very ambitious and, have certain goals. And even though they're pretty young, they don't really know what it will look like, but they want to be successful. And then you get to know like all these firms and different career paths and what are the different steps to take in order to land such a job, right? So you're just in a very different environment that probably for me and for most young people then triggers something and becomes pretty admirable. Like you want to be successful, right? You want to, yeah, like at least also try different things. I guess it requires a certain level of curiosity, like everything in life, in entrepreneurship, but also in finance or business. And for me, I actually like one step that you forgot to mention is I essentially started my career at the KfW, which is basically a public development bank of Germany. And I did basically dual study program, which is a German specific thing. I'm sure you know it, but essentially I had to work at this bank 3 days a week. And then 3 days a week, I had university classes. So essentially started my undergrads with a 6 days week, which probably also helped a little bit because you're basically 18 years old and you get from, very chill and relatively unambitious public high school environment to this private business school plus 3 working days a week. And so you suddenly have a huge workload, which on the one hand side is a bit of a different student life, although I'd say we had an amazing time and really great. Like most of my best friends are from that time, and I had amazing exchange semesters. But you basically start very early on, like working hard and gaining first work experience, and then also still at the same time being in this business school environment where you also have to, I guess, go the extra mile and sort of perform well because you want to maybe open doors to different career paths and new jobs. And so you're really basically in a unique setup that you don't find in many other, I think, undergrad or even business school setups. They were you just try to get the max out of yourself and gain a lot of experience in a very early in your career and life and in a relatively short period of time. And then that leads basically to the next steps, which are the things you mentioned, right? You become familiar with, let's say consulting firms, which is a very common field. So you try that. Then finance, especially in my case back then, sort of studying in Frankfurt, where most or a lot of people end up in the finance world, and investment banking becomes something you want to try. And in any case, I guess an industry that has a certain myth and sort of interesting like characteristics yeah, it's a very specific industry that I guess as a young guy, you find interesting to try it out, and also a place with a lot of downsides, but certainly you learn quite a lot in a relatively short period of time. And so then basically that leads you at some point to private equity. I mean, definitely not everyone, but in my case, it's a combination of, okay, having worked in investment banking, strategy consulting, which are usually the two main fields where private equity firms recruit from. And so it's a bit of a combination of the skill sets you gain at those previous jobs, and then it was also in my sense a bit opportunity driven. So I had the chance to do an internship there, and so that's how I then really for the first time understood what that job is about. And then it was a good opportunity to start full time, which is typically relatively rare after university, because private equity firms mostly recruit investment bankers or consultants with like 2 3 years of experience. And so then I think I just wanted to take that opportunity and try it out, and so I ended up basically in private equity. So there's a long way basically, with many different coincidences and sort of steps that I took, and was eventually happy and grateful for that opportunity, and I think was also a great learning experience.
Yeah, on the other hand, I mean, you mentioned it like starting from the age of 18, you paved your way to this kind of success story, right? So it was not just pure coincidences and luck left and right. It was like a journey that was a very dedicated one, right? So yeah, basically 6 days a week, spending time in the university and then working in a very sophisticated field. Yeah, also requires a lot of a lot of time, also a lot of pain, I guess. But yeah, you ended up in London, and correct me if I'm wrong, but I would say the major finance hubs in Europe are London, Frankfurt, maybe Paris, but these are the top two dogs, top three, maybe Milan.
Yeah, I guess London is still by far the biggest, and Frankfurt, Paris, Amsterdam, Zurich, etc., are all great hubs as well. But London is probably, with New York and then the Asian major finance hubs like Hong Kong and Singapore, probably the finance hub in Europe. So there was another reason why I ended up in that job and sort of took that opportunity versus starting in strategy consulting or investment banking in Germany or so, because it's just a very unique and massive hub where you get to work on transactions or projects across Europe basically, and you're in a very international environment.
So it's like really like internationally, it's like you have New York, London, Hong Kong, Singapore, like these four, and the rest are like these four are the S tier, and everything below is like solid A tier. So for example, Frankfurt, Paris, and right, like this is how you would basically construct a tier table, no?
Yeah, kind of. I think Dubai is probably also up and coming nowadays. Wasn't the big
Mhm.
thing back then when I started my career. Tokyo, and there are probably a few other hubs, but yeah, I think internationally, New York, London, for sure, Hong Kong as well, Singapore. So yeah, it was within Europe basically and still is the biggest hub, and that was actually pre-Brexit, I guess, not just after. So it was a yeah, pretty good career opportunity, especially for the first years.
Yeah, so tell us more about, the lifestyle of working in private equity in London. I understand that probably are also a lot of cliches around that. Some of them might also be true, but what was life, as a young man living in London, working in PA? What can people basically expect from this life when they when they start this journey, or like in this position as yourself? Where do you live? How long do you work? What's like work-life balance? Do you actually have time to spend the money that you earn, and what are the financials here? Like, kind of a rundown would be much appreciated, because also to make it like more clear, you worked at Blackstone, right? Which is like one of the S tier firms you can work in this sector, right?
Yeah, yeah, it's probably probably more boring than you would think in terms of it's not this Wolf of Wall Street kind of environment and lifestyle
Yeah.
that you live necessarily as a junior in finance. And then private equity is probably on average a lot more normal than starting a career in investment banking, where you tend to work longer hours and oftentimes also tend to live a little bit of a different lifestyle. But yeah, it was an amazing time, to be honest, because I was, I guess, in my mid-20s, just graduated, started a job in London. And what's cool about it is that in finance, basically, um, all the new analyst classes start around the same time. So you can imagine basically, Morgan Stanley, Goldman, JP Morgan, all these banks, they have a new intake of, let's say, 50 to 100 people that just graduated from university, mostly all across Europe or even beyond that internationally. And so you have a lot of young people moving to London at the same time, getting to know each other, working hard, but then also, having a good time in London. And luckily, a lot of my really close friends from university days also started their career in London around the same time, and most of them at different firms. So you get to know a really big group of like-minded people of the same age, basically in the first few weeks and months in London, and so you have a really great community, and I think that was quite interesting. It was basically felt like another sort of a few years of university or even exchange semester. You're in a new city, right? Of course, on the other side, you also work relatively hard, so it wasn't exactly the same. But I would say in terms of hours, it really depends, and it's super volatile, especially in private equity. You can basically have weeks where not much happens in terms of, deal activity. Maybe it's market driven or fund driven, and so you have pretty normal days. Where you go at home basically after dinner, where you go home after dinner around like 7, 8 p.m. Um, but then you also have weeks when you work on a live transaction, and that's the same for all the big private equity funds or investment banks or also law firms, like all these, transaction-driven services firms. Where you can work basically until after midnight and every day, and 6, 7 days a week or so. And then suddenly such a deal might die, and you basically start from scratch again, and you have more normal hours. But I think the trickiest part for me was that it's always outside of your control, especially as a junior. Meaning you don't have any kind of freedom. And even though you don't work every day until midnight or 2 a.m., but you really can't control it. So there were instances where I for example, didn't work as much and sort of finished work at like 6, 7 p.m. in spring or so, and I had my summer holidays planned, and then suddenly you get to work on a live deal, and the week before you have to cancel your summer holiday plans, which would have been the first holidays of the year or so. And so um, things like that I think can be really frustrating. And for me, as someone who values freedom and control over my life much more than most other things, that was at some point something I wasn't really, or I didn't really feel that it was a great trade-off, to be honest, especially at that age. And so, and I still don't think so. Um, but so yeah, coming back to your question, I think lifestyle can be very interesting. You're obviously also earning a good amount of money for that age, and so yeah, you have a pretty interesting lifestyle where you still can't afford a nice apartment in London for sure. So you can
What are
only be
like the
living in a
entry
flat share.
salaries there? What are the entry salaries there, and what amount do you need to plan for rent? Like I imagine London being like very similar to New York, like closer to New York than to, let's say, Frankfurt pricing wise.
Yeah, and it has changed a lot, I think, since I started. I think the salaries have increased quite a bit since then. At least that's what I hear now from my colleagues and and basically other people in traditional finance. Um, but to be honest, back then, I mean, the entry levels depend also a lot on the firm, and private equity is usually a little bit better than in banking. But I think in banking, even at the biggest banks, some would make like 50K annually pounds base salary, and then you have a bonus on top, which can be 50 to 100% or more than 100%. But that is obviously only paid at the year end, right? And then you have to pay relatively significant taxes and social security in England as well. And so and yeah, flat is basically similar to, I mean, higher than Frankfurt or Germany for sure, and probably any other part of Europe, lower than New York. But yeah, you end up paying, I don't know, maybe 1.5K monthly on a room for a room, and so there's not much left actually in terms of base salary. So you clearly don't live that Wolf of Wall Street lifestyle, but it, frankly, for most people also doesn't matter too much in the first years because ultimately, you know that you will make pretty big jumps if you stay in that industry, and at the end of the day, you get a nice bonus at the year, and so I think very few people are trying to optimize for short-term base salary as it's, you know, just good enough to basically fund your lifestyle and not a crazy lifestyle. And so, yeah.
Yeah, so you're looking probably like after a year, like if we would look at private equity and investment banking, it's fair to say that like the top talents could earn like around the 100K benchmark, partially even more. And yeah, after 2 or 3 years, you could actually go very, very fast towards 200, 250, right? Like within the first years, if you stick to that, if you top up the bonus a little bit, like um, yeah, but as soon as you reach basically the summit, then things tend to become a little bit easier. But you have to survive the first 2 or 3 years, right? Where you also have
Yeah.
to give up a lot of freedom.
Yeah, exactly. And then by switching jobs and switching from investment banking to PE or hedge fund or so, you make even better jumps. But yeah, in the first year, it's definitely realistic to make significantly more than 100K. And then, yeah, as you say, after 2 years, 200 plus and so on. And, you know, at some point you make 500,000 or so. But not a lot of people stick around for that long. And it's always a trade-off, right? And you're obviously surrounded by also pretty smart and talented and ambitious people, and there are also opportunities elsewhere, which a lot of people realize. But it depends. It all depends a bit on your risk profile. And so, if your risk profile long term is relatively low, but you're willing to sort of exchange your time and control of your life with sort of yeah compensation, then it's a fantastic and risk adjusted. It is overall a fantastic career path, um, but it depends on how much risk you're willing to take and sort of how much control you want over your life and sort of yeah what I guess long term your ambitions are. For me, it was always also the way I looked at it in the end was a bit like if I keep doing this for the next 30, 40 years or so, which a lot of people end up doing, you know pretty much what the outcome will be, how much money you can earn, what kind of role you will have, what you're going to be doing on a day to day. And for some people, it's, I mean, it is sort of potentially big amount of money and it is very desirable for a lot of people. Um, but for me, it was always in my mind, okay, if I look back in my life in 40 years and this is all I had done for basically 40 years, um, would I not regret missing out on other things, having tried my own thing, or you know, having moved somewhere else, having sort of started my own company or tried a new job opportunity or so? And isn't it always possible to go back to that industry if you really wanted to? And you know, if you try something else and fail after a few years or so, and it was always a bit my framework. And then it also really felt like a no-brainer if you have some level of risk appetite. Not for everyone, I think, but um, that's the way I looked at it. And but it is very difficult. I think if you're young and sort of starting a good career and then also having worked for it for so many years and having put so much into it and then sort of leaving all of that behind. But yeah,
Yeah, and I think this leads us to the founding part, like founding Areta. But before that, like when was the first time you first heard about crypto and when did you get in? I think that's like the first thing. Was it during your time in London or even before?
it was actually before. So funny enough, I studied business information systems, right? And one of the sort of during the final year or so, I we had this course which was basically a project course where, as a class, we had to develop something on Ethereum. And so we basically had this professor, and that was like very early days of Ethereum. And so this professor basically was a big advocate of blockchain and taught us
Ah,
back in the
Sandner, right?
days. No, actually not him. It was a
Okay,
different one. Rosbach was his name, but
okay.
he was basically teaching us about blockchain and Ethereum, and he was saying literally, what I'm teaching you guys now is like, real money at some point, and I'm teaching you, something that will could change your life. And yeah, I guess
In your case, it
at
did.
that time it was, huh?
In your case, it did. It
Well, in my
changed your
case,
life.
I basically, I basically didn't take it too seriously back in the days. I think I had bought a little bit of BTC and ETH at the time or before, but yeah, definitely not enough. And at the same time, I also didn't take it seriously enough to consider making a career in that space. I mean, that wasn't even an industry back in the days, of course.
What year was it?
But
Roundabout 2015,
20
16, right?
around that time, yeah, I think
Okay.
so. Um, yeah, so basically that was, I guess, my first real touch point with industry, and then I very successfully ignored it and instead decided to double down on a finance career. And then really got back into it, I guess, around COVID or so. So a bit more than 5 years ago, maybe.
Yeah, and then I think it was like in 2020, I think you told me COVID times you still experienced that in London. And then what happened? Like, I think you've co-founded Areta in 2021 or something. So that was like between getting back into crypto and founding Areta, wasn't that much time in between. Like, how did this happen?
Yeah, it was actually a quite natural transition. So I spent a few years at Blackstone, and I knew already since I started at Blackstone that, or actually I knew way before, but it was clear to me in my first year at Blackstone that I wanted to do something entrepreneurial in my life, and I was, willing to leave after a few years, basically. And so, like the first few years, besides working and enjoying London, it was also about figuring out what that could be. And that's actually incredibly hard if you're working a lot, you're in a very comfortable environment, you make a good salary, you have a decent career trajectory. And so really, and starting a business or even like identifying the right opportunity or industry is like incredibly difficult, and especially in parallel to working in finance. And so for me, it was a bit coincidentally that I kind of discovered crypto again. But actually, before doing that, I was exploring a few other sort of areas to start a venture in sort of outside of crypto, but in tech or tech-enabled industries. And then kind of getting into crypto was a bit coincidentally. I had some friends who were spending a lot of time in crypto, especially during like 2020, 2021, and kept talking about it, and I kept ignoring it successfully. And but at some point, I was actually quite bored at some point during COVID, and had a bit of time. There was not much to do, so I started trying some DeFi protocols and fell really down the rabbit hole. And back then, and then I started really spending most of my time outside of working in private equity and in crypto for a few months, and realized, okay, that's where the risk reward profile is super unique. For someone with a background and interest in finance and tech, it's the very unique combination. And at the same time, yeah, basically the creation of a new asset class and technology that not a lot of people grasp its potential yet, and it has a lot of flaws, or had at the time, still has, but improving a little bit. And so it just felt like this really once in a lifetime opportunity that I didn't want to miss out on. And then it was just about finding the right business model, or what could I do in the industry. And at that time, close friend of mine who I met at Blackstone, basically he was already spending a lot of time in crypto as well, and so we were basically experimenting and yeah, trying to figure out what could work for us, and also with our skill set. If you're a pure finance guy, then what can you really do in crypto, right? Ultimately, a lot of people were launching venture funds at the time, or had launched them already before. Our background was obviously in investing or sort of asset management, but not really venture. Plus, there was also a very hot and competitive market, and so we kept looking for different things. And yeah, then really at some point found this opportunity and decided to go all in on that. And
Because there was
yeah,
not much
few
M&A
years.
going on, right? There was not much M&A going on. There weren't many M&A banks or professionals, right?
Yeah, there was first not much M&A going on, but there was obviously suddenly an industry emerging that was still super immature, but where there was a lot of capital flowing into it, and some really good talent starting to building companies, and actually making use of this technology that was created some years ago. And so ultimately, that in our eyes sort of would lead to an industry, a legit industry that will also have some level of consolidation, and most importantly, that will need a crypto native investment bank that understands this asset class, understands basically the ecosystem, the different players, and really caters also its services to the specifics of that industry. I don't think I would have ever imagined trying to build an investment bank coming out of private equity. And it's generally not the typical business you found, but only in this specific industry, it made a lot of sense, and you would be able to create a proper moat and yeah, be able at some point to compete with bigger banks. And so it felt like a very unique opportunity that not a lot of people realized at the time, and at the same time, something that really uniquely matched our backgrounds and profiles in this specific industry, having sort of crypto native understanding and interest, and the appetite for taking this risk and believing in that industry long term, and also having this long term time horizon, which also not a lot of people in crypto in particular had around the time, or still have. And so yeah, it felt like basically that it matched on a lot of aspects, and so we decided to go all in on that.
Yeah, I think that's the right time to also basically cover the market dynamics a little bit, because you mentioned in the beginning immaturity, not much M&A activity, and so on and so forth. But yeah, how did things accelerate? And then one point, I mean, we worked on one M&A deal together back in the days with friends to Spike. I also know that I mean, I think it's also fair to say, like, whenever I get asked, hey, I'm also looking to do like mergers and acquisitions, I always say, "Yeah, okay, happy to connect you to JP and the team at Areta." And what I like, what it looks on the outside is that currently there are very busy times at Areta. Your team is growing. You can see that on LinkedIn, deal after deal. So now that the industry is like really consolidating, and we're getting into this in a bit, why this is the case, it's fair to say that now is like kind of the golden times for having an M&A bank, right?
Yeah, I think it's been definitely changing a lot, as you say. I think in the first, 1 or 2 years when we started this business, there was almost no activity. And so besides M&A, then we also started to basically adjust this model more to crypto world and, became active in governance and decentralized organization, started doing more capital markets transactions, which we still do a lot today. And so, but from an M&A perspective, it was very different. And plus, it was the beginning of the bear market. So from a purely business and revenue perspective, the worst point in time. But at the end of the day, for us, with a long time horizon, was the best time to start a business because it means you have a few years until there's potentially a new bull market to really build the company, expand your track record and network, and be in a position where you can get access to bigger deals in the bull market. And I think that in hindsight worked out really well for us, although it was a very hard time in the first few years. And also, as a first-time founder, we were extremely young, especially for founders of such a company. Typically, I mean, when investment banking boutique or so is founded, which also doesn't happen that much anymore, but typically founders, are investment bankers with like 20 years of experience. And so it was, a very difficult time, I think, to start in an industry that, just went or just started going through this incredibly tough bear market with FTX collapsing, a lot of doubts about the industry, and plus then first-time founders, bootstrapped. But I think the good thing is that we stick to it and then really had to grind through the bear market and build this track record, slowly start building a team. And so we were in a position where by the time the bull market started, a lot of people actually already knew us. We, had a decent client base, had a running business, had a team. And so then throughout the bull market, could expand that team further and, double down on the opportunity. So yeah, I think last year has been very busy. I hope it's not going to be less busy in the next few years, but I'm very confident that, yeah, we've built the business in a way where I think, it's not as cyclical as the industry per se. And also the industry has grown up a little bit. M&A is also somewhat uncorrelated, or at least not strongly correlated to short-term token prices and noise. But yeah, it's been a very exciting year, and I think for us as an organization also to grow from small startup to really a bit more of an established player. I think in M&A in digital assets, as you say, we've become the market leader last year with more than 10 completed transactions. There are obviously still big transactions that happen without us, and also with any of our direct peers, right? For the big deals, you would compete with the Goldman Sachs and JP Morgans of this world and so on, and it will always remain challenging, especially as an independent firm. But at the same time, the interest from traditional finance banks also comes and goes with market cycles, which then again, looking forward, hopefully creates another opportunity for us. So you basically have all these big banks, come and go whenever there's an opportunity and the industry and the pie grows and it becomes relevant enough for them. But I can also see a scenario where many of them disappear again. I think the bottom was always a little bit higher after such a bull market, and probably there's a lot more institutions that have built conviction in the last few months. But ultimately, I think by just sticking around and doing a good job and building the right connections and doing some good transactions, it's every bear market represents a new opportunity for us to grow as a firm and establish ourselves even more.
Yeah, I believe, I mean, even basically becoming potentially also incubated by another bank, right? I mean, you guys have such an extensive network, almost everyone in the industry for JP Morgan to basically, for example, get started. Like it's an uphill battle for them. No, so would you also think that, for example, Areta could be like an interesting M&A target?
Yeah, I mean, let's see, but I think if you look at sort of the early tech days and around the dot-com bubble, there were a lot of these specialized tech investment banks that were acquired at some point. I think it's a business that just compounds on like insane level because you get to know a lot more people every year, and you do more transactions with every deal. You get in touch with new buyers, and so I think it's and also more than I expected before we started this business. But it's just an incredible business model if you do it well and if your time horizon is just long enough. It's not necessarily a business you want to sell soon, and frankly, it also takes a lot to establish this platform that someone will want to acquire. But so it's definitely not our goal, but yeah, you never know. And of course, there can be also merits with of combining it with another, bigger player, especially as the industry matures, becomes more competitive and requires also different types of, services and capabilities, capital, and so on. So we'll see. But I think for now, we're very happy with the bootstrap and neat setup and being independent and very sector focused.
Yeah, and you mentioned the term maturity, so maybe like a small outlook into crypto because like I was actually on a panel about M&A because we were like involved in this M&A transaction in 2025, 2024, 2025, as you know. But yeah, like whenever I had these conversations about seeing the market institutionalizing, seeing the market becoming more mature. So, what do you foresee for the next couple of years for the industry itself? If we just consolidate like everything to like a big pie, and then all of a sudden this ecosystem that usually contains many ecosystems, many players, many projects and teams become basically like more like a monopoly style thing, like the crypto industry, and we are just becoming like another arm of the financial sector. Because if you talk to a lot of people in crypto right now, this is like what it seems like a little bit, right? Like centralized stable coins, banks building their own tech stack. Um, a lot of OGs left the industry. I read 2 days ago that Kyle Zamani said, "I'm leaving crypto." So yeah, what's the takeaway here? What's kind of a forecast? Because I believe M&A plays maybe the biggest role in all of this, bringing everything together, like consolidating everything.
Yeah. Yeah, in my opinion, it's always difficult to make such predictions very early in the bear market or, after
Mhm.
these last few weeks. But I know a lot of people are saying basically that, this crypto native Wild West days and sort of the vision a lot of us got excited about initially, but and joined the industry on, it might be over, and it's just becoming this technology stack that a lot of non-crypto native technology firms and financial firms, traditional finance companies will leverage and build products on potentially. Um, I do definitely think it has changed, and we see it a lot with all these networks and crypto native protocols that have launched and focused actually not on getting traction or sort of the more traditional metrics, but instead focused on other things and their token and I think that has basically, I think that time has changed already before this market correction. I think last year or before that, a lot of people realized, okay, we have to grow up as an industry. We have to focus on real metrics. It was really difficult suddenly for, these infra coins to track capital because also suddenly there was this M&A exit path and IPO exit path leading to more appreciation of real businesses in crypto also by VCs, and that's where a lot of capital would go. So I think already before potentially the beginning of this bear market, I think the industry grew up a little bit or came to certain realizations, and it's just a logical consequence that now some people that believed in it for this bigger crypto native vision are leaving or losing some excitement, and some of the businesses building on that foundation are struggling and dying. And I think that trend will just accelerate as the industry consolidates and markets are turning red. So we've already been seeing it actually in the last few weeks that we just got a lot more inbounds from smaller businesses that are struggling, running out of cash, struggling to raise, and looking for M&A. And that's typically a bear market sign to a certain degree. And so I do think that this trend will accelerate. What the end vision really is for crypto, I think is a bit unclearer than it was for years, for most people a few years ago. But for me personally, it's more positive than it was a few years ago, just because you have this, fundamentally healthy tailwinds and also really attractive use cases for the first time that have this clear product market fit. And yes, a stablecoin payments business might be centralized and might not exactly match what some crypto OGs envisioned it a few years ago, but it does leverage blockchain technology to a certain extent, or maybe in the same way as sort of we were hoping for a few years ago. And it is actually incredible to see that there are now real businesses being built on top of that by run by founders that are maybe not the crypto native guys that made Bitcoin money early on, but still actually believe in this technology now and are taking advantage of it. Um, and then you have regulation and so there's a lot of things that actually make me a lot more bullish than I was probably in the last bear market. And I think it is just this process of cleaning in the industry. And yes, it will look completely different again in 5 years or in 10 years in the next bull market. But history has repeated itself, especially in this industry, and some people will be leaving. There are other opportunities in tech, AI, robotics have become really interesting and were such a thing in the last bear market. But there will also be a new group of people that will enter the industry or that will continue to believe and adapt to the new driving forces of new flows of capital, institutional adoption, and therefore I think the industry will continue to develop itself. What the end state exactly looks like, whether we're just building basically a new form of technology layer that real businesses will leverage and own more in the long term versus a completely decentralized world, it's really hard to tell. But I do think also AI and agents, robotics can play a really huge role in the adoption of crypto itself. And that space is moving so fast that I think it's really tough for anyone to make a prediction to what extent and crypto will be used going forward. But I think it remains, a super attractive industry from a risk reward perspective. And especially if you have this long-term horizon, it's, I think right now in a unique position, and bear markets are usually a very good time to build and focus on the industry and your business. And yeah, if you keep believing in the industry, and we and I personally still have very strong conviction and probably stronger than ever before, then I think it can be quite an exciting, optimistic future.
Yeah, as it's always has been the case, bear markets are very ideal, like just ideal for building. So heads down and get the work done. Yeah, JP, pleasure as always talking to you. Was a lot of fun and covering all of the angles from M&A and crypto. I also think I just do want to add that I think if you look around in the world right now, across all sectors, you see a bunch of M&A activity, right? It's not only a crypto phenomenon. You see it like in all sorts of industries and sectors that things are coming together, things are consolidating a little bit. Also because I think like the big like the world as it is, it's just consolidating more and more and more in many ways. So yeah, that's like something that we all need to keep an eye out for. But yeah, thanks again for joining. Where should people go to when they want to get in touch with Areta? Maybe want to learn a little bit more. Maybe they're like people looking for an M&A opportunity and are looking for someone who can advise them.
Yeah, sure. Always feel free to reach out to me directly, LinkedIn, Twitter, our website, areta.io. And yeah, always happy to chat. And as always, pleasure speaking with you, Yuri. Really enjoyed our conversation and all the best for your future. And I'm sure we see each other soon.
Thanks, man. It was a pleasure.
Thank you. Bye bye.